What's up, everybody? It's Steve's Trades. Today is July 21st, 2025, and today I'm going to be explaining you the easiest way that you can take your first payout day trading. This is the easiest strategy that you're going to use to collect your very first payout. And now this strategy, you ask, what is it called? So the strategy is called opening range break. Some people might have heard of this before, others might not have, but I am going to explain it to you. And just a quick disclaimer, I obviously did not make this. This is not mine. I was not the inventor of this concept. This is not some rebranded ICT concept. My friend actually sent me a Playbits PDF that had this strategy in it, and I backtested it and used it and ended up getting a payout with it. So I thought it would be worthy of teaching because it is very simple for beginners. So anyways, step one to the strategy. Identify the opening range. So what is the opening range, you ask? That is the time period between 9:30 a.m. and 9:45 a.m. The first 15-minute. We're gonna match this candle right here. This is gonna be our first candle, our 9:30 to 9:45 candle on the 15-minute time frame. So we have to identify the opening range, which is this first 15-minute candle, and we have to wait for it to close. So at the top of the 15-minute candle, it's 15-minute time frame. Okay, we'll leave all the notes up here. So (9:30 to 9:45) on the 15-minute time frame. And so the high on the wick is going to be your range high, and the wick on the low is going to be your range low. And so after you have your opening range set, you now know what your range high and your range low are. You are now going to set alarms or some notification or just watch the chart and see when price is going to head either direction, either up or down outside of this range. Now, what you want to wait for is a 5-minute close outside of this 15-minute range. So you need a 5-minute need a 5-minute body close outside of the range, not a wick close. You need a body close outside of the range high or the range low on the 5-minute time frame. This is your 5-minute close on the outside of the range. So for this instance, if you had, this was your opening, let's say we had a bullish day, aka we are like a long day, a green day. You have your first 15-minute candle, so your 9:15 to 9:45, and then this would be your 5-minute candle, let's say 9:45 to 9:50, and you have your body close outside. Then you would take longs from here and expect price to continue higher to either draw on liquidity. Now, the best way to set your stop loss and your TP is going to be using standard deviations. And if you don't know what a standard deviation is, you are going to go over here and choose the Fibonacci retracement tool. And if you just click and you drag it out, you can see that this is just a regular Fibonacci tool with equilibrium, OTE. You're going to want to change it two standard deviations, which are 1, 0.5, 0, negative 0.5, negative 1, negative 0.5, negative 2, negative 2.5, negative 3, and then also you should have one set at negative 4 as well. And so now what you would do with your Fibonacci retracement tool, your standard deviation tool, you would set this on the opening range candle. If you were to go long, let's say we're using this long example, you would buy market there, or you could wait for a retest. You would buy long there and market, and then your take profit would be at the -2 standard deviation. And what I have found most times is either you can TP at -2 standard deviation, or if there is some major liquidity in between that. So either TP at -2 standard deviation, or session highs or lows, or daily highs and lows. So, you know, TP at previous day high, previous day low. If you're about to take out, like if London highs was before -2 standard deviation, I would just take profit at the London high for your take profit, or any session liquidity, any major liquidity, because you have a higher chance of reversing off of that than just going to the -2. You have to keep the concept of liquidity in mind. It won't just always go to the -2. Alrighty, identifying bad days for orb. When should you not take orb? So my big thing is, don't enter orb pre-red folder. If you have 10 a.m. news or something like that, do not enter before the red folder drops, because you can get whipped out really easily. Certain high impact news days, you know, CPI, NFP, FOMC, you are going to have a lower chance of getting a good entry. Also, another thing is when the strategy does not happen before 12. So let's say this is our candle right here. All right, our low. This would be our opening range low right here. And then this would be our opening range high. So this would be 9:30 a.m. And then you would have 12. So if you do not get a close on the 5-minute charts, close on the 5-minute charts before 12/noon, do not take. If it's a day like this where it does not close out, it wicks out, doesn't close, you need a body close, remember that. If it does not body close out of here before noon, just get off, come back tomorrow, try it again. And that is basically opening range break. So once again, I'm going to do a small recap. Opening range break. Identify the first 15-minute candle. And then basically wait for a 5-minute close outside of the 15-minute candle towards your draw on liquidity, which would be if you are bullish or bearish on the day towards what highs or what lows. All right, so here we are on FX replay. We're back here on June 2024, just back testing some data. I'm going to give you guys an example of how to use opening range break. So first things first, obviously when you come in the morning, find your draw on liquidity. I'm just going the hourly chart real quick. I'm looking at new hourly to open. Skip that a couple minutes. Okay, so that's our new hourly open. It says 9:05. Here, I'm just gonna go to a couple minutes before open, because obviously we need to wait until basically 9:45 to see our opening range. So we can't even enter before like 9:50. 9:50 would be the earliest entry for this strategy. So let's go back on the 1 hour. What do we have available here? We swept out our London session lows here. London took Asia as well. I think we're bullish. Got a 1 hour CISD. So we're just going to mark out this buy side right here. Let's mark out these London highs. Or sorry, these are Asia. This is Asia high. And I'm also going to mark out this Friday high here, because that could end up being in play today. So we swept that out. Big SMT here on ESNQ, so it's just another confirmation that we are bullish. I know this isn't part of the open range break. This is just me finding my draw on liquidity for the day. So go back to the 1 minute. Right here, even we can stay on the 5 minute. We don't even need to drop to the 1 minute for the strategy. Okay, so this is 1 minute. This is 1 minute before open. We are bullish on the day, so we are going to wait for our first 15-minute candle. So the 9:30 to 9:45. So there it goes. Okay, it took Asia. 5 more minutes. Okay, so this is our 15-minute candle right here, and it has swept all of these. The Asia, or so London highs, I didn't mark those out. Whoops. The London highs, the Asia highs, and its buy side. Take these out. We might retrace. Who knows? But what I'm going to do is going to mark opening range high and our opening range low. Now I'm going to drop into the 5 minute. And remember, I don't want to enter this if it doesn't happen before noon. So I'm going to wait now. No close. Still waiting. Still waiting. Accumulating. 10 AM accumulates. Ooh, we're close. Okay, and now here is our entry. This is going to be our 5 minute close outside of our opening range. And I am bullish on the day. We still have these Friday highs available. Let's see if we can get these. So what I'm going to do is I'm going to use my Fibonacci tool here. Drag it up to the high and low of the 15-minute range. As you can see, from the low to the high. And then we are going to use this Friday high or this -2 as our take profit, and this 0.5 for our stop loss. So let's just go to this high. Let's go place order, buy market. Stop loss is going to be at 20.029. 75. Take profit, 22.73. Cool, and then we will go in for, I'm gonna just keep doing one contract, just keep it simple. And now let's 5 minute chart here, and let's see what happens. Okay, first. All right. Picking up a little bit of momentum here. All right, another retest. 1 PM here, gonna open. 2 PM opening a little higher, so this trade would have taken the whole entire day. Remember, for prop firms, you can't be in past 4:15, 3:55, where's 4? We'll just mark out 4. think it might have been we're just gonna do 410 just to be safe here. All right, so let's say we closed our position there since you can't trade anywhere. Close position, 100% because we can't trade past 415. Say, all right, now for our next day, we close the position out of that one. This is the following day here. We have our SMT here at the low and at the high. So 9 a.m. candle. I think we are still going to be bullish. Not gonna lie, depending off what open does here. So the highs and lows, we have London highs available here for our buy side target. And what else do we have? We have this Thursday buy side as well here. That'll be a Thursday London high. So let's drop back down to our 5 minute here. We are still before open. This is 1 minute before open. So we need to go on the 15 minute and wait for the first 15-minute candle to close. So, all right, very bullish reaction right off open. As I was expecting with the SMT, I knew that these London highs were going to get ran. Just wait. So this is our first 15-minute candle here. To mark the opening range high and opening range low. Now we are going to use our Fibonacci retracement tool once again to mark out the high and the low. This will be where our stop is, and the -2 actually lines up perfectly with our London highs, our Thursday London highs. This London high I would probably de-risk after or go to break even just in case of a chance of reversal or getting stopped out. So now let's go down to our 5-minute chart and let's just wait for a close outside of our range. Just like that, we actually have a very good close that is just outside of the range. So we're gonna go set our stop loss, take profit. What's 0.5 at? 2241. 0.75. Take profit would be 2370, 0.50. We're gonna just go ahead and journal this. Oh, whoops. Save it. Now, all right. First candle. Second candle. We have taken our London highs. So if we're on 1 minute, I would have broken even after this candle right here. So let's de-risk our position. And let's see what is to happen. Let's go back on the 5-minute chart. And thankfully we broke even. You would have gotten stocked out instantly from that 10 a.m. candle. I'm guessing that there was 10 a.m. news this day. I might have waited for news if I had known that. Obviously I'm back testing, so I am unaware of the news for the day. If I had known that there was 10 a.m. news, I would have waited for the news to drop. Now, does this mean that we can't get a re-entry? No, we can still get a re-entry on this. Let's just see how it plays out. Oh, I'm on the 1 minute. Oops. That's why it moved so much. All right. So you sweep this out. All right, we have a very bullish reaction here. We could now try, and if we wanted to, if we were still very bullish, let's say we go to these London highs, we could either market order here if you wanted to, or you could try and get another retracement back into the opening range. So you can go like place order. Let's do a limit this time. See if we can get a tap back in 2267. Contract, stop loss, same thing. Take profit, same thing, 2370. Order's not good. Oops. Let's go save. All right, we got our buy limit here. Let's see if we can get tapped in and get our continuation up to here. Okay, so we tapped in? Yep, we are tapped in. Oops. Now let's see what happens to us. Still bullish on the day. We don't have a CISD lower. Ooh, very close. All right. Continuation. Very nice. Probably de-risk after this, breaking that high right here. 5 minute close us out of this high, go break even. And boom, take profit smashed perfectly. So that's 2 days. We have taken 2 wins and a break even. This is just to show, obviously there's going to be losers. I will show a full month backtesting dashboard of this strategy. However, this is just 2 easy winners and 2 easy ways to show you and identify the strategy and how it works. Alrighty, so I have back tested opening range break for the full month of July. I've done a month of back testing, and here are the results. So I risked 1 contract, just flat, same 1 contract throughout all the trades, no matter the stop loss size. Total P&L 15k. I started on like a 50k in theory. 58% win rate, 2 RR. There's monthly gain, weekly gain. And here you can see the last month of my trade. So here we'll go all the way back to the start. Started off on a win, gonna break even. Won again, break even, lost. Won again, lost again. Winner, break even, lose, lose, break even. Winner, winner, break even, winner, winner. Full week winners. Loser, break even, loser, loser. Big trade. And then another break even, 2 slight losses, another big win, then another slight loss. So overall, this strategy is profitable and it does work. This is a month of data that shows that it does work. But with that being said, thanks for watching my video on opening range break. Have a good day.